Luke, it's great to see your face and be able to talk to you since we had this red wave. Does this red wave nuance your narrative or change anything, accelerate what you thought was going to happen, stall it? Um, where are you at after this surprise red sweep here?
It's it depends. It depends. I think both Blake and Ryan made great points about kind of watching some of these correlations. I was just noticing that myself of dollars up,
Yeah,
10-year yields down. That's a potential correlation break. And uh, that has been governing for the last 3, 4 years, like clockwork. And so the question
yeah,
I think is going to be, I don't think we want to answer it in a day or two. I think we need to let a couple of maybe a week or two go. And the reason I say that is the move volatility index in the Treasury market
yeah.
exploded higher on a single day event risk. Harley Bassman, the creator of that index, had a great piece about 2 weeks ago, 2.5 weeks ago, going into the election, where he was able to strip out basically the contract roll on that move index and say, look, this is the bond market is treating this election as the single greatest day of definable risk since the United States set the January 15th, 1991 date to invade Iraq. The market could look at that date and say, something's happening here. I don't know what, but I also know it has the potential to be very market moving. And obviously it was. My point in highlighting that is that this correlation that we've had for the last 3, 4 years of dollar goes up and that starts putting pressure on foreigners to defend their currencies and start selling down treasuries, selling, yields up. It does appear to be breaking in the very near term. However, some of that breakage may be simply kind of this roll off of the move index, which has fallen sharply post election. And that in another week, we're going to see this correlation maybe keep breaking, and then all of a sudden the correlation is going to rejoin. Because the reality is, foreigners are still short $13 trillion in dollar denominated debt, and so the reality is the euro dollar market didn't change; it's still there, and so there is a price of the dollar where they're going to sell treasuries again. And so that's how I'm thinking of that in terms of the tactics of it. But I definitely think it's very viable because it is possible that maybe there is something that has really changed in terms of behavior with Trump. So I think we need to watch that over the next week or two to see that correlation if it continues to break down or if it kind of rejoins after normalizing post this move event risk that was
Okay.
priced in, priced out. So
Well, yeah. So,
yeah, beyond that,
10 years, 10 years closed. That's why they're down. So we have the bond market closed. What I'm looking at
yeah, yeah.
last week. Yeah, so I'm strongly neutral when markets are closed. That's my opinion.
Yeah. That's always wise sage
Uh,
advice.
but look at the week. We had a decent week in TLT last week, and I know you're negative, and long term, I am too. Can you give me a narrative, even with Trump taking office, or maybe
Sure.
it gets it out of the way for us to this bear market rally could continue for a
Well,
while?
and to
Because
be
go ahead.
yeah, I mean to be clear, when I went on that podcast, I was trying to be very clear with Adam that I'm negative that bonds are uninvestable on a real basis. I said they can
Yeah.
rally nominally, right? So
Okay.
like, I that is ultimately the bull case of look, I think we need to take this Trump administration, and I understand there's a tariffs, strong dollar, yields down, kind of trade in place right now. And I've been doing this long enough where you just kind of feel like, I don't want to stand in the way of that. I heard someone say I don't want to stand in the way of it. Like, I agree with that very tactically.
Yes.
However, I think last week on Tucker Carlson, RFK Jr. said that he spoke with Trump for several hours, and that Trump was saying shocking things to him. And so Tucker said, "Well, shocking how? Shocking? Are you shocking good?" And RFK Jr. said, "Shocking good, but very impolitic. He's an impolitic guy, and he's going to do what he wants." And so I'm struck as I get beyond the next couple weeks, the next month, I'm struck by this divergence between what I would say are Wall Street, broadly speaking, investors, traders looking at the market saying, okay, here's where we are, and here's the various paths that we could go and the implications. And I think my base case is increasingly shifting toward that's the wrong way to look at it, and that the right way to look at it, at least with part of your brain, is to start at the end and work backward as to what Trump could do. In other words, Trump wants a weaker dollar, a way weaker
Yes,
dollar.
right.
And okay, so how can he do that? There's a lot of different ways that are shocking and impolitic, right? You're hearing talk of end the Fed from people going into the administration. Will they end
Yeah.
the Fed? I don't think so. Will they talk more about end the Fed if
How
they need to
about
get the dollar down?
defaulting? There's been talk about the defaulting on the debt.
Defaulting on the debt, end the Fed,
Oh,
shadow Fed, get whatever. There's a lot of ways you can get people scared out of the dollar. And so I think what's the bull case at the long end of the curve? The bull, and this is why I said I think they're uninvestable on a real basis. Get the Fed to cut rates to zero with nominal GDP at 5 to 6%.
yeah,
The long end's going to rally technically for a while, especially. But
yeah,
Bitcoin's going to be 200,000 and gold's going to be 4,000. The S&P is going to be 8,000. And so you're going to make 10%, 15% on your TLT, maybe 20%, but you're going to give away 35%, 50%, 100% in these other more inflation sensitive assets. And inflation's going to pick back up. So that's to me the bull case on TLT is basically some sort of financial repression deal, or some that's in the next 3 to 6 months.
yeah. So, before the Fed cut, and I did want to get to the Fed, there's so much to talk about today. I figured that there could be some type of bounce in yields, like a sell the rumor, buy the fact on yields, but I sure didn't expect them to get above 420, which was the breakdown here, and actually hit targets off this 420 sale, and we're up here. So the persistence of the move tells me this low is in, and any pullback now in yields maybe to under four again, 390. I think that's all they have in them before they make a move back towards the highs.
I could see that technically, and I think importantly the persistence of that move. Something we've been saying, we've talked about it before, Dale, something we've been
Yeah,
saying with clients for years, since the Fed started hiking rates aggressively, was the Fed's mistake this time was fighting inflation. That basically they came out and tried to be Paul Volcker with the
yeah,
balance sheet of Evita Peron in Argentina. And you
yes,
you don't get to do that. Like there's an order of operations that must be respected. And the order of operations when you have debt to GDP of 120% is repress the bondholders, inflate and yield curve control, however you do that, from 120% debt to GDP down to 70, maybe 80%. Then you can play tough guy Volcker without the threat of putting your government into fiscal dominance, without the threat of essentially bankrupting the United States of America, where now your interest expense is the single
yeah,
largest line item individually. Entitlements
yeah.
collectively are, but uh, I tweeted something last week where Powell said, well, we're not involved in fiscal. I'm like, you're not involved in fiscal, like the pig's not involved in breakfast, right? Like he's committed. Hey, you raise rates, you're spending fiscal dollars. You cut
It's the
rates, you
least
are spending.
confident. It's the least confident in his voice that I've heard him. Um, maybe ever since he's saying "Kumbaya" after he tightened and then reversed course several years ago. He did
Yeah,
not sound
yeah.
sure.
Well,
Why?
I
Why
think he
did
knows he's
rates
at a
go?
spot,
Right. Why
right?
did rates
Right.
go up? He goes, well, it's a market. They're looking at growth. He was stuttering a little bit. It was the weakest performance I've seen. He's worried.
I think that's exactly right, and he should be worried because he screwed up, and the way he screwed up was not considering his operating environment. So, for 2 years, I said, look, they're going to get to a spot where his choice will be, how do I want to lose the long end, by cutting or by loosening? because of that debt load. And I
Yeah.
think that October, or whenever it was, late September or October, 50 basis point rate cut,
Yeah.
that was him deciding to lose the long end by cutting.
Right.
They didn't need to cut. The real economy didn't
No.
warrant it. I think there's some slowing, but like 6% nominal GDP growth, like 4%
Yeah.
inflation, really? And it was the fiscal side that, and so I think that's important context as we then tie it back to Trump, which is there's this, moves, correlation breaks, etc. Like in the end, the debt is still an issue. The deficit is still an issue. The competitive position is getting worse by the day, vis-a-vis China and others. And so, you
So
know,
it wouldn't have mattered who won. We were still heading towards a mountain,
the debt
right?
has to be devalued on a real basis, one way or another.
Okay.
That's it. And so I think it matters around the edges, but
Yeah.
ultimately, in terms of, are we going to get EV stimulus versus oil stimulus, or opening up the Alaska National Wildlife Reserve for oil drilling versus putting 64 million solar panels in Colorado, whatever.
Or tax
Those
policy.
tax
Tax policy.
policy, maybe. And but here too, I see with tax policy a lot of sort of the bargaining stage of grief still. People saying, well, we just need to raise taxes, we just need to cut spending. Like, no.
Yeah.
Like you for since 1940, America can have whatever tax rate it wants. It gets 18.5 to 21.5% of GDP, full stop. And it's at about 19.7%, smack in the middle. So maybe a little, you can raise
Okay.
rates, effective tax rate a little, but like people say, well, they were 80, 90% under Kennedy. Well, yeah, but everything was a deduction. You were a doctor, you could deduct your car, you could deduct, I mean, just everything. And
Your
Reagan
whole
tax,
life.
you deducted
Your
your whole life. So your effective
yeah.
tax rate was 18.5 to 21.5. So like there's this bargaining phase. Well, maybe we can do this, maybe we can do it. Now, if we get some sort of shocking information drop on these, some sort of new energy technology, these UAPs that keep getting put on, the UFO stuff. Like this is the more you see serious people talk about this, the more I mean, Harold Malmgren, who was in Washington for 65 years, out
Yeah, I
on
know
Twitter
Harold.
today. Yeah,
What did he
Harold's this. Yeah, this
what did he
morning he said,
say?
look, he just said this morning the question's how fast will Trump release some of this UAP stuff? And then how fast will the Russians and Chinese release their UAP stuff? So there's some like major, and then like that could completely change. If we get basically free energy, you can take a lot of what I'm saying and throw it in the trash. I'm going to be dead wrong. Bitcoin will tank, gold will soar. Well, probably
What's
tank then soar, but
yeah.
but
Yeah. What's
yeah, those kinds of
Dalio?
things are hard. What's
What's
that?
Dalio? Dalio did an interview lately. Didn't he have a real big bearish case for Bitcoin's bearish Bitcoin and has a pretty low price target on it?
That I
Did you
don't know. I didn't see that
Okay.
one.
All right. I heard about that. I want to talk about tariffs as a policy. And, people who don't study history, it really did deepen the Great Depression, the Smoot-Hawley tariffs. Can you see tariffs exacerbating the situation we're in? And couldn't China really cripple us if we piss them off enough? Because I read years ago, and you're writing about this now, that if a transformer went out, it would take us 5 months to get one because we don't manufacture them here. And where are they manufactured? Yeah, you're right, China. So you're writing about these. People were talking about it because there were people going out and shooting at transformers, trying to knock them out. People have talked about, cyber attack and we go dark or have a problem. Um, do you have a generator at your house?
Yeah,
Okay.
natural gas powered, baby.
All right, there you go. So Luke is prepped for something like this happening. So isn't it possible that China, because we haven't reshored everything, we've hardly started to reshore, that they still have all the production and they could cripple us if they want with things that we need? that they won't send to us?
In theory, yes. Ultimately, I saw somebody highlight the other day that look, the Smoot-Hawley tariffs deepened the Great Depression, and then they pointed out, hey, the U.S. in the Great Depression was in China's spot. In other words, we were the factory of the world and exporting to everybody. Um, and that's correct. And what this person didn't point out was that the US now is in the position of basically Europe slash Weimar Germany
Okay.
back then,
Yeah. Okay.
right?
Yeah.
So,
Yeah.
when you look at the trade flows, yeah, we were exporting everywhere, and Smoot-Hawley basically was very deflationary, broke down trade. So then we don't do as much business globally, really deflationary in America. Okay. Now, Germany had already suffered its currency destroying hyperinflation by that point, but you had the UK devalue the currency, you had the French devalue the currency. The Germans basically had to go into uh, to avoid another hyperinflation because they'd already hyperinflated. They slashed the government to the bone and paid the price politically with the election of Hitler. So the point here is that yes, tariffs are deflationary for the exporter, so for China, but they are extremely inflationary
For the
for the
consumer.
importer, for
Yeah.
us. And
Yeah.
people say, well, China will pay up, blah, blah, blah. Maybe. And what it does tell me is that there's an overriding consensus that, the COVID supply chain interruptions are what drove the inflation, not the money printing. And I think it's a
Yeah.
combination.
Yeah.
And we're talking about we're talking about a permanent supply chain disruption. And that's part of the reason, it filters into my view of why bonds are uninvestable on a real basis. Yeah, you might make money in the short run, but like, do you really want to be long the long end of the curve on a real basis as we're getting into a trade war with the world's factory? That's
Yeah.
not wise in my opinion. So, can China do those things? I'm told they can. There's an effort afoot to to get China out of our grid effectively from a supply chain standpoint. But some of it is offshoring, but some of it is just poor planning by the prior administration. In the same way that there was this just not realists running thing. My friend Doomberg pointed out that transformers are designed on a cycle, on a cycle of use, which is to say they run hot during the day and then at night when everyone's sleeping, they cool down. Well, when does everybody plug in their electric vehicle? At night
Yeah.
while everybody's sleeping. And so these transformers never get a chance to cool down. Well, his research showed that but when you get enough EVs plugged into the grid, what happens to the useful life of your transformers? It goes from a 30-year useful life to a 3-year useful life.
Wow.
Whoa, nobody talked about that with EVs. And to your point, we don't really make transformers anymore. Not really. It's the Germans and the Japanese and Alstom, which is I think French or at any rate, and then the Chinese. The Chinese are absolutely big there. So we're working on doing that. But again, okay, let's bring it back. Well, building factories isn't deflationary. I don't want to borrow money. I don't want to lend money to the government at 4.25 or wherever the 10-year is if we're going to bring back a bunch of factories because that
Right.
money's going to, inflation's coming back, huge
Yeah.
as the
Yeah.
Donald might say. So
Okay. All right. So inflation's not dead. That could be could that be the pin that pops a bubble? I mean, there's no way to say that this isn't, we're into parabolic advances now on equities. In fact, we're into parabolic advances on everything except the metals stopped for a while because of this dollar. But you have S&Ps and you have and you have Bitcoin. I mean, they're everything's going up together, but this is the first time I've seen some differentiation with gold going down and the market going up. They were going up. Everything was going up together based on whether the dollar was weak or strong. Is that changing?
maybe in the very
All one
short
word.
run, I think in the very short run, like, I'm not surprised to see gold down on a Trump victory, but I think ultimately what we're watching is I think what we're watching is two things. Gold selling off on sort of a relief rally of that Harris didn't win, which I
Right.
think there were some serious concerns on, and then also just that the related positioning. I think gold's going to be higher a year from now,
Yeah,
potentially
but
meaningfully so. But
but
everything
we
else, I
could,
think.
yeah,
I'm sorry. Go
we
ahead.
could see 2400 again, Luke, is a
Sure.
level
Yeah.
technically
Yeah. I
where
could see
I
that.
yeah. So
Yeah.
how do you have and as far as Bitcoin is concerned, with Trump being in favor of it, even talk of a Bitcoin reserve, a strategic reserve of Bitcoin? What do you think of that concept?
I think it sends Bitcoin way higher, obviously, but
Yeah, yeah.
the U.S. has a fiscal problem, right? So the real $64,000 question is how do you fix it? And so, to me, I think what with the parabolic moves, it gets to a very binary situation, which is if I start from the end and work back, like I talked about, at the top of the show, the trading move is a very different move versus if the US government starts trying to cut and go into austerity, right? So it's
Okay.
if I start at the end and say this thing is going by March of next year, it's going to be clear that basically the US is going to financially repress, they're going to cut rates. We're going to have some sort of yield curve control one way or another, de facto, not explicit. I don't think we'll ever have explicit, but de facto yield curve control. So basically, we pin the 10-year at 4.25. We take the front end down to 1 to 2. And the dollar goes from 105, whatever today, to 90. And inflation's on its way from 4 to 8. And that to me, if I knew that was going to happen, I would see the price action we're seeing on our screens, which is um, in terms of equities, in terms of Bitcoin. I think, like I said, gold, I think has some risk off to work, wash through, and it could pull back, but
Yeah.
I think it ultimately is way higher. So I think that's one side of it. The flip side, if they come in and do austerity without cutting the debt first, you're going to want to own the dollar, and that's it. You can just buy the dollar, go to the beach, and wait until they, panic.
Everything will
And
get cheaper. Everything will get cheaper, right?
everything will get cheaper before the Fed has to take their balance sheet to 20 or 30 trillion to stop the meltdown of the system.
Okay. All right. And you talked about this type of behavior that this new president or former and once again the comeback kid president will be lionized in history books. Now, I want to know, do you mean the lions that hunt in prides in the jungle, or like the lion in The Wizard of Oz?
If he does the things it's looking like he's going to do, I think he'll be lionized in the history books as um, one of the greats, ironically,
Wow.
because he has a moment here. He has a moment in front of him in the same way that Obama had a moment in '08. And Obama
Okay.
took his moment
Squandered
and
it.
squandered it. He brought his Wall Street guys in, and they did more of the same. And so
Yeah.
he squandered his moment. Trump squandered his a little bit the first time around because he too went out and hired a bunch of Wall Street guys and the usual sort
Right.
of deep state people. And RFK Jr. noted that in his Tucker Carlson interview. He said, "Look, if you pay attention, he fired like half his cabinet in the first 2 years," and that is usually spun in our media as, well, he's a lunatic, Trump's a lunatic, and no one wanted to work with him, and maybe, but what have we learned about our media in the last 1 year, 2 years, 5 years, 10 years, 20 years, right? Like they're going to act in the interests of the state. They're giving us that side of the story. What if the story, the other side, that it maybe is even closer to the truth, is that Trump wants to make real changes, handicapped himself by hiring the wrong people, and now he's
Yeah.
back and he knows. And early on, very early on, he's acting like he learned his lesson. He learned his
Okay.
lesson.
Isn't that when we learn the most, when we embrace our failures?
Yeah, and
So he's
yeah,
embraced his first term. He never would say it, and maybe it wasn't a failure, but he's getting a redo.
He gets
And
a redo, yeah, and
yeah,
he's got some people around him that know. And that's why I say I think it's important we start at the end. Like he wants a weaker dollar, full stop. And so like I get mechanically why tariffs, blah blah blah, by the dollar. Great. I wouldn't linger. You make some
yeah,
money on that trade. I wouldn't linger. He wants a weaker dollar. He needs a weaker
yeah,
dollar. None of this works. The debt side, the reshoring side, anyway, none of it works without a weaker dollar. And that can, weaker dollar against Bitcoin, weaker dollar against gold,
yeah, against
weaker
everything.
dollar.
Okay. So that's the goal. So that it's going to be a great shorting opportunity when this rally, ends. I just hope it ends by at 109 and then starts heading down. I can make a case for 109 in Dixie.
And I could see that. And I think critically as a trader, what you want to watch for is the move, right? If you get the
Yeah,
dollar go from 105 and a half to 109 and the move stays at, I don't know, wherever it is today, 10, 101, 107, it doesn't. So
yeah,
yeah, if you call up the
yeah.
move
We're
index
at
on
105.60 and we're on the verge of a pretty important breakout.
right, and
So,
call up the move index on that MOVE on TradingView.
okay. So Luke is giving me something else to watch. I know Pete, I know you talk about it a lot.
Yeah, it
It's an
should
index.
be. Yeah, go to all. There it is, top one. Click on that.
Wow.
Right. So there was your right. So from October, that, and if you overlay the dollar with that, that has been strong dollar up, bond
Yeah.
dysfunction up. And every time it's gone over 130, we've gotten dollar liquidity immediately, going back 5 years, because we can't have the
Okay.
Treasury market dysfunction. And so that was the event risk I was talking about. Anyway, my point is that I would be watching that as a hawk if I was trading dollar or any dollar crosses, because if dollar continues strengthening and that stays well behaved, stays down there at 100 or so, then the regime has changed. If in the next week or two the dollar continues to strengthen and that thing starts getting off the mat and going higher, that's going to be your first warning that the regime has not changed, that the stronger dollar is still squeezing dollar debtors, and that
Yeah.
ultimately will self limit the dollar rally. And then at the technical points on the dollar that you're talking about, you can short with some conviction because, again, the United States government is not going to allow the market to dictate its borrowing needs, pace, rate to it. It is always going to inject dollar liquidity when it needs it to keep that. So I think that's a key one to watch for traders over the next several weeks.
Okay. So you've heard it from Luke. I learned some things today that clarify what I've been missing in the dollar. So uh, when you become a subscriber, you'll understand what I'm talking about. That Luke is very important to have in your intelligence gathering toolkit and to go to From the Forest to the Trees, LLC.com. And Luke has a great YouTube channel. He's interviewed by everyone. Keep in touch with this guy. He's been, long Bitcoin for a long time, long gold for a long time. And it seems that, you know, he doesn't cater to traders. He's just helping people navigate the fourth turning, which is not an easy job. Okay, so Luke, appreciate you hanging out with us again today, my buddy, and we'll talk next year in a brave new world, right?
Absolutely. No, I appreciate you, man. I always enjoy coming on and talking shop with you, my friend. It's
Uh,
really enjoyable.
Luke Gromen, follow him on X at Luke Gromen, and you're going to be more aware. Keep an open mind; it'll keep your account open. Thanks, Luke.
All right.
Great
Thanks, Dale. Have a
interview,
great one. All right.
like
Thank you. Take care,
usual.
my friend.
All right, buddy.
Bye-bye.
So that's it, Luke Roman, and it's you could watch it later on. if you want, and you could join the team in 14 minutes on the morning edge. And I wish I had talked to Luke a week earlier. Anyway, better late than never. I hope everyone has a great day. Consider being part of the community so that you could immerse yourself into the trading atmosphere and not just leave face and go off into your own little silo and do it yourself. Collaborate. All right. Cooperate, collaborate. You need a community in these times. These are tough markets. Okay. They are tough. I don't care if anyone's on a roll or not. I think you could ask anybody and they would say so. Anyway, good hunting the rest of the day. Don't just count your pips, count your blessings. And that's going to be a wrap for me. Hope you enjoyed Luke. Yeah, he's great, isn't it? 200,000 Bitcoin saloon. Wow. I'm hearing 120 and then a bus. Luke is not my father. I would be his father for it, Scale. All right. All right. Anyway, that's it. From Family Crypto. Anyway, have a great day, everybody. Adios. See you tomorrow. Turn around Tuesday. Take it easy.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.